Big question that was traveling across international trade hubs is why the United Kingdom fought so hard to secure this treaty. And the answer is pretty simple. This is the single most economically significant bilateral trade pact signed by London since leaving the European Union. For years, British exporters have faced a massive wall of historically high Indian tariffs that heavily restricted their access to our domestic markets. By systemically breaching now these protected tariff walls, the agreement is projected to save British businesses £400 million within the first year alone. From a macroeconomic perspective, this deal acts as a much-needed long-term engine for post-Brexit economic growth. Independent economic estimates show that the treaty will expand the United Kingdom's yearly GDP by nearly £5 billion in the long run. So put that in context, this single pact delivers a substantially larger long-term economic growth spike to the UK than their prior post-Brexit trade agreements signed with nations like Australia, New Zealand, or even Japan. Beyond the raw numbers, British industries desperately needed a gateway into the world's fastest growing middle-class consumer market. So by slashing those administrative red tapes and securing access to India's domestic spending power, there are specific British sectors that will now be shielded from global stagnation. And last but not least, this also grants UK firms the right to legally build for massive Indian central government infrastructure and green energy contracts for the first time in history. So ultimately, this framework achieves a massive foreign policy objective. It firmly anchors the concept of global Britain directly at the center of the world's most dynamic trading corridor.